Welcome to the Real Joe Show, where we speak with industry leaders to learn about their tips, tricks, roadblocks, and successes in an ever-challenging real estate market. On this episode, we are honored to have Chad Kufen of Farm Bureau joining us. Let's welcome Chad. All right, Chad, welcome. Thanks for coming.
Thank you very much.
Appreciate that. So we're going to dip into a couple of things about really how a good insurance agent can help a real estate agent build a business, create a better transaction. And it's really important to get you guys engaged at different stages throughout the process. But first, let's talk about you and how you got into insurance. Why don't you do that?
Yeah, well, appreciate having me, Joe. First of all, insurance, it's certainly not what I did out of school. I spent 20 years as a golf professional, actually a club golf professional. I made a decision about 12 years ago to get out of that industry and look for things that would work for my strengths. And one of the things that I enjoyed most was the relationships that presented. And I had a gentleman I knew in the insurance industry and seen the line up pretty well. So the last 12 years, I've been doing this.
Great. Well, don't invite me to the golf course. You don't want that for sure. So why Farm Bureau? What's special about that?
Yeah. First of all, the culture, I made when I first got in business, I worked more on the commercial side of insurance. I made a decision 5 years ago that really changed my life. And that was through some advice to search out and get contracted with North Carolina Farm Bureau Insurance. But their culture from the top down for us as independent contractors, but to have the support that we do for them.
And is it just, it's in North Carolina? So is it just in North Carolina?
Yeah. So there's, I believe it's 13 farm bureaus throughout the country, but each one is state individual.
Everyone has different state rules for insurance.
Yeah. It's really
all right. So real estate agents, we really typically just think about getting the lender involved. Then the insurance kind of comes after the deal's put together. They finally have a lock on the house. It's agreement in place. And then sometimes it's 2 weeks before the closing and it's like, we need insurance. So what's the best time for an agent to introduce their buyer client to an insurance agent?
Yeah, certainly early on in the process, I do think it's valuable for real estate agents to have, teams that they work with, for themselves, but getting involved early on, they're, certainly don't want to wait. We can find out the day before and have it done for clients. That's not a problem. I wouldn't suggest doing that. But there can be a lot of things that get found out in the process. So as an agent or your buyer, the earlier you get us involved, we can run reports when we do quotes for you. Those reports will produce back if there's been claims on the homes. And I think that's a really valuable thing for people to know up front.
Especially Carfax of homes.
And I think most of the time, it's nice to provide that information to your home inspector when they go in. They can look at certain things and check things out. So earlier the better, for sure.
Yeah, I've had a scenario where somebody was pulling out a wall and they unknowingly they opened up the wall and they saw a lot of char and the boards were pretty destroyed.
Yeah,
they had a big problem and they had no idea that there was a fire.
And when we go to underwriting with a new home, underwriting's going to ask questions. Their job is to make companies profitable. And so when they see claims history on things, they're going to ask questions. So the earlier that we're involved as insurance agents, especially here with us in North Carolina Farm Bureau, our home office is right down here on Glenwood Avenue. We can call the underwriters and have a conversation about the claim. So I think it just helps the agent with their clients a lot better.
So that's a really good point you made. Everything that you do is underwritten in North Carolina. So they know the rules, they know.
Yes, they do. And with us being a company, and we're a $2.5 billion company, so we're not a small company, but with us being a local company, we have direct conversations with our underwriters. We're on the phone with them, we're having conversations about, because not everything's black and white, as we all know. So there's stories behind everything.
So have you been in doing those reports? Do you have any examples, or has it happened where it's helped in negotiations with?
Yeah, actually, coincidentally, about 2 months ago, I had a client referred to me, and in the process, I responded back to him and said, tell us about the fire. There was a fire claim. It was $100,000 fire claim. That sounds like a lot, but it really doesn't take much with water damage to be a $100,000 claim. When I asked that question, the client didn't know about it. And immediately their realtor, who I actually didn't have a relationship with or know very well, reached out and was very interested in that as well. They didn't know. So through that process, everything turned out to be fine. But that would be information that could have been pretty bad. It did help them in some negotiations from what I understand, as far as maybe getting saving a little money on the home. But I can tell you the conversation I had early with my underwriters allowed there to be no hiccups going into that. If that was something that we had submitted in and then it got found out, maybe it is one of those last minute things. Underwriting could have denied it. And because underwriters, insurance companies don't like fires. So that's really the thing. They wouldn't know, has it been addressed? So just 2 months ago that happened. And from what I understand, because we were ahead of the game with that.
Not only that, I mean, case in point, but I just mentioned earlier when those people opened up the wall and saw that, at least now these buyers going in knowing that fire, that it's a peace of mind. It's something that we got.
Yeah. And it was a peace of mind. There was an electrical type of thing, just an accident that happened, but those outlets had all been replaced and so forth. So I think that the buyer peace of mind was definitely.
So let's talk about that. So we're showing a house, the realtor's in there with their buyer. They're going through the house. Are there any things that should pop out that should say, let your insurance agent know this, or this could be a concern, like, the plugs or the piping or the electrical box? So there's still things out there that you need to be aware of.
Yeah, and I think a lot of it's on age of the home. Anything over 50 years, obviously and 50 could be maybe 60 now. Everything seems to move a little bit, but everything built in the last 50 years has been similar, but it keeps changing. And, there's always questions about pipes and things like that. What we find is, if there wasn't an issue in the first 20 years, it probably isn't an issue now.
Right.
But yeah, definitely looking at those things. I think it's good to have the conversations around renovations, roofs, when things were updated. That's a pretty good conversation to have because it is important. Wear and tear on the house, that's where the claims come from. Yeah. So a house that's more mature because the opportunity for a claim is much greater than a brand new home.
I guess. So there's been, in most recent years, a huge uptick in the costs of building materials. How does that affect insurance policies?
Yeah, it affects it greatly. There's no question. We call it the RCE, it's the replacement cost estimator. The insured value of a home is much different than the market value. I don't insure my home, my personal home, for what I could sell if it comes down to finishes and what would it cost. As an insurance company, our promise to the clients is to put them back into a whole situation of what they were before a claim. If that's in the total destruction and we have to rebuild a home, well, we have to build it today when they may have paid for materials 12 years ago. It's no question it costs more. I've even heard that banks, lenders are currently sending out letters to make sure that their clients are having a conversation with their insurance that it is insured because they're trying to protect their loan. Sure. We do reviews on an annual basis with our clients. It's up about $15 a square foot just from an insurance standpoint.
Okay. So you're reaching out to your existing clients on a yearly basis. Is that something that you could, a realtor who has, obviously they sold the house to somebody, how can they use that information? Is there a way they could tie you into that?
No question. If they can make that phone call, not that they're insurance, a lot of times we see, your agency as well. People decide to stay with whoever they have. They don't change. It's easy. It's a process, a stressful process when you're closing on a home sometimes with that. So they stay with who they are. But a good way for your agents, they're always, I know speaking with a lot of your agents, looking for ways to talk to their clients and stay in front of their client. That phone call, your agents are, industry experts calling them and saying, hey, when's the last time you spoke to your insurance agent? This is something that's really important. They're going to discover a lot of them don't know their insurance agent, but it is something that we encourage people to do is to reach out to them. So your agent's making that phone call. They don't have to have the answer. They don't have to tell them what it should be, but
it's not their expertise.
Yeah, but calling them and saying, listen, it's been 24 months. Things have changed a lot. Have you had this conversation? And they should have that.
Yeah. Absolutely. It's a great touch point. I mean, we're always thinking of reasons, coming up with reasons, and that's a great. Do they have to wait towards a certain point of time during like towards the end of the expiration, like the anniversary of the home, or is it would you want to get engaged with that?
Well, I mean, home insurance is a prorated thing. So it can be changed anything. You can change
You don't have to wait till
it.
that to expire.
There's no short rates, no nothing. You can change insurance companies anytime you want. You can make changes to your policy anytime you want. So, we're not just saying we always love to gain business, but when your agents speak with their clients, they're simply just trying to have them reach out to their insurance agent. If they find that that's not correct, their insurance agent can make changes to that existing policy to make them more comfortable.
Is there a big difference from company and the price points, or is it just the coverage?
So there are some significant differences. The rates are filed with the insurance commission. So we all have different rates. So we're not all the same. We're a mutual company and we're a local company. We tend to be very competitive, especially on the home rate side of it, where more national companies are writing and underwriters are dealing with risks that are more national. We're dealing with risks that's more local, and by being a mutual company. So I tell my own clients, you want the review on an annual basis, but every so many years you should look at it. And right now, we all, the way the economy is and everything else, we're all paying attention to what things cost. And it's certainly something you want to make sure that you have adequate coverage.
So when you mentioned like the national companies and looking at the national risks, and you were just looking at North Carolina. So we're looking at national. Are they taking into consideration the fires and
no question,
all of that, and they're bundling all in to spread that risk out across the whole?
I have seen us quote the exact same coverage as a national company, and the most significant I saw was half the cost.
Wow!
And it was a larger home. There was about 2,000. So an interesting conversation to have with the client, because I have to explain to them why. It's the coverage is exactly the same, but the rates are different. And it's exactly that. They're dealing with that. And if you see anything in the news right now, Florida, Texas, California, a lot of insurance companies are pulling out of states because of the risk.
I remember, I recently voted for kick out, and all the companies vanished because of the hurricane risk.
Yeah. And a lot of them are doing it. We hope every year we don't have those type of risks that impact the state of North Carolina. We certainly don't wish they're on anything. But we plan for it. We're writing for the risk of North Carolina. We plan that there's going to be a hurricane. We have to plan for that. We hope there isn't, and that's a good thing.
So on that,
we are in hurricane.
And what should a homeowner think about? What should they consider about hurricane risk?
Yeah, well, from an insurance standpoint, making sure their insurance is correct. Because a little interesting fact is once a hurricane gets to a certain point, we call it in box. When that occurs, you can't make changes. You can't. To an existing policy, new home, closings, things like that, they're not going to prevent any of that. But you can't wait until something's coming and say, I need to put this in there. That's just as a homeowner. And another conversation for your agents, touch points to reach out to their clients. You hear them talk about it on the news, and my wife kind of makes fun of me. I'm in the insurance business. When storms coming, it does make a lot of sense to secure things around your home. Sure. Because they can cause a lot of damage. And then one of the most important things is once a storm passes, whether it's a thunderstorm or a hurricane, you need to go out and look at your house. You need to take a look at things because you may not notice something that's coming through the roof for 3 or 4 weeks. But if you go out there and look, you can prevent a lot of things or at least fix them quick.
Right. Yeah. And let tornadoes whipping through. So, same thing, right?
Same thing, and it is, I saw a meme a couple weeks ago, and I'm the typical guy at the house. I secure everything in and I put my face against the window and look come through, right? So that's not what you want to do, but it is very important to secure things around us. But more importantly, it's the touch points of making sure the coverage is right. When I go away, I was away the other week on a vacation. I know some storms came through. As a client, and an agent, I'm not worried. I hope nothing happens to my home, but I know it's protected.
That's great. Let's talk about flood. So coming from a seaside town, floods from the ocean. That's not true. Tell us about flood, and just obviously there is a lot of coast here we have to concern ourselves with, but also in the triangle.
Interesting thing. 2 weeks ago, I took a really exciting CE course, and it was about flood risk. And so I'm by no means an expert on this, but one thing that was eye-opening and shocking to me, they did a graph of the state of North Carolina, and I don't recall it's the exact, but there was double the amount of risk exposure and claims in flood in the central part of North Carolina than any other part of the state. Some of it, I'm sure, has to do with the coast is built for it. Things are built differently down there.
We get a lot of stilts.
They're built a little different. But the mountains is a place that has a lot of flooding because those thunderstorms, when they come through here, they're creating landslides and creating those things. But the middle of the state, which we were in, the triangle area, down towards the Sand Hills, was the more risk factor for that. And the North Carolina Joint Underwriters Association, which is an insurance company we all share, they write a lot of the wind and hail storms and things like that. So they're the ones. We have our own flood through Southern Farm Bureau, which is a company of ours, but it's very eye opening. And insurance, you can buy flood insurance anywhere, even if it's not required. So there are places that you're going to have clients that are required. A really good, I can't remember the website, but for your agents, you can Google it, and you can Google risk and put an address in, and it will tell you. And if you're in that X factor, that's no risk. And, it's a 1 out of 10 type of risk factor, but you can still put flood insurance on your house. I have it on my house, places you wouldn't imagine with Florida urban flood.
And there's certain areas right downtown Raleigh that have that issue.
Right down on Glenwood Avenue, just south of our home office, actually, by the mall, they've had substantial areas from the Crabtree Creek. It's just where things are. It's infrastructure built around it and then the creek. But what floods it is not the creek. What floods it is the rain has nowhere to go. It's
Falling down the roads. Yeah.
Right. Flood's definitely something to get involved with. And like I said, I have agents that will reach out to me immediately and ask me for, can you give us some, and maybe not just a quote, but is this a risk factor? My client would like to know.
That's great. Smart. Let's look at, we have to have insurance on the interior. Can you explain how all that works a little bit?
Sure. And this is another good thing when you talked about earlier about when should an agent get their insurance. When it comes to, that's a really important piece to happen early, because a lot of HOAs cover a lot of the insurance.
Yeah.
And you're paying for that through the HOA. What we do is, and the agents can do that, we try to request those HOA because we can read it. It looks like jargon. We can read, and it will tell us two things. It'll tell us three things. One, there's no coverage and you need to insure it almost like a townhouse then.
Okay.
Most of the time they're covering everything to the interior studs of the property.
Yes.
Some are covering everything. And when they say everything, they will rebuild it the way they've sold it, which is really an important piece when you start talking about coverage. And it kind of start there. If you have a HOA that covers all of your insurance, you really don't need it. More like a renter's insurance. Now, the important thing is they will rebuild it the way it is. So if you decide, you and your wife decide to move into a condo and decide that, this is our forever condo, we're going to rip the floors up, nice flooring down and all those things, they're not going to pay for that. So you want to make sure that it's very similar to a renter's, but still a condo policy, that you're insuring the betterments and improvements. So that's an important piece. Most condos they're going to replace everything to the walls in. So then you're responsible for that. And you use a different, $60, $70 a square foot. But really at that point, then you're saying, I'll rebuild this, counters and everything else. And it's a much different way to insure something. So, and half the cost. I mean, if you're insuring something that's 1,500 square feet as a HO3 policy, which is a home policy or a townhouse policy, it might be $700 or $800 a year. But if you only have to take care of the inside part. The other thing that's important in those policies and any policy, but especially in a condo policy, is there's assessments that the HOA, if you read the HOA agreement, it will say, we're going to put this back. But all the homeowners may be responsible for some portion of our deduction. And that may be a large. So in a condo policy, but small, you can add that endorsement on there, and your insurance policy will actually cover the assessment from an insurance standpoint, $10,000 to $15,000 assessment, they might give you. So, but condos, especially here in Raleigh, I mean, they're going up everywhere.
Oh, it's huge.
And it's important. But I think getting this for us to read, I think we need more insurance.
Let's talk about investors. There's so many investors around here. They're buying homes. They might be flipping them, but a lot of them are keeping them and they're renting them out. What should they be looking out for?
Yeah,
this comes from
insurance. Well, it's insurance companies look at they're different types of policies. If you as an owner are not going to live in it, it's got to be insured differently. It's got to be written differently. Typically, your loan has to be. We're also seeing a lot of folks buying a new house, keeping the existing home. The top conversation we have to change that type of policy. Typically, what you're doing is they call them a dwelling or a fire policy, because you typically don't have contents in it. That would be somebody covering that from a renting standpoint. So it's written as a different type of policy. The risk is greater.
Let's get into investors and how insurance.
Well, it's a good question because it's very, very different. Again, insurance companies look at things differently, whether you're going to live in it or you're going to invest in that and have it rented out or flip it. So the important things would be if you're going to live in it, it's a home policy, HO3 policy. Even if it's a second home. If you're going to have a second home and you're going to short-term rental it, you want to talk with your insurance companies. A lot of insurance companies are included. If it's only going to be done for a short period of time, you could put an endorsement on that existing policy. But if it's truly going to be an investment and you're going to buy it, you need to write that differently. The insurance company looks at it very different. The risk is greater. And really all you're trying to insure at that point is your dwelling and fire coverage. You're not really going to have much contents in it. So one thing that's really important to keep in mind though is you're going to have greater liability. Our company is one of the companies that will extend liability off your primary home, or you can write a separate general liability policy. But your risk if somebody getting injured or, we were talking about condos a few minutes ago. If my condo has a leak and it goes into other condos, I've created the damage.
Right.
So they could come after me for that. And that's where that liability stands there. From an investment standpoint, the other thing a lot of folks are doing is flipping houses. That's a builder's risk policy. It's a very different. I have run into clients that didn't even put insurance. They didn't know they needed it. It was a cash thing. So no one was telling them they had to have insurance. Fortunately, nothing happened to it before they sold that property. So there is no insurance on that. So all of them are different. The insurance agents, again, it's what we specialize in is knowing we're not trying to sell anybody something different. We're just trying to make sure that if there is a claim, it's written correctly and it's not denied.
You mentioned something that I forgot about, and that's policies for liability. Talk about that a little bit, because especially if you have like pool or jungle gym or stuff like that outside, or give me an idea of all of
that. Some insurance companies don't like certain risks. We're somewhat liberal on those things. Insurance, if you really look at it, it's very inexpensive. And the changes from just the basic default of $300,000 of insurance to $1 million, it could be $10 on a home policy.
That's it.
Yeah. And then, you bring out the policies or that next layer of insurance, and that will sit over all of your risks. It will sit over top of your home risk. It will sit over top of your auto risk. It's extremely important that I personally think everybody should have that because it's very inexpensive to do it. But you brought up things with the home. If you add the pool, you want to have that because you can be held liable if something happens. You want that protected. Most people are building pools. They want their kids' friends to come to their house.
Yeah.
You're adding that risk there. We have young drivers come on, right? And you're at risk. You own that vehicle, and that's where you want that to come into. You're protected for that type of risk. And what's great about that is if you sell a home or you buy another home, you're automatically covered for that type of risk. Now, we review it annually and you update it.
Sure.
But if you are covered for that type of risk and you add, you haven't changed anything with us. Now, if you decide to buy an apartment building, we need to know and make sure we adjust that. But yeah, that's, another part with the agents when they're talking to the clients, maybe after they've moved in a house a year later. So those are things that are important and it can help them stay in front of their clients too.
Now we're layering risk on home and liability, umbrella policies. What about other insurances linked together? What else do you offer?
Yeah, well,
and does it make sense to go to all? I know you're going to say yes, but does it always make sense to go to one insurance company and bundle it?
I think it makes sense to speak to an insurance agent about it.
Sure.
I represent North Carolina Farm Bureau and contracted with them to be an advisor and build a business around that. But I'm going to do what's right for the client. I'm going to have the conversation what's right for the client. But it does make sense from a risk standpoint because I have worked with this individual that I knew very well and had different pieces all over the place before we moved it together. What we determined was he had 2 properties down the beach that actually didn't have an extension from his house up here.
Okay.
And his policy really sits over that policy. And so there was a gap there. So he thought he had $5 million worth of coverage. We really had it on everything but these 2. So it wasn't his fault, but he had multiple people he was dealing with, and they're not communicating necessarily with each other. So I think that one of the benefits of having everything in one place is that you are having a conversation that with your agent on an annual basis, and they know your moving parts of what that is. But you bring the point, there's different policies happening, exclusions in policies. Your typical home policy is going to exclude flood. So if you want to add that, it's going to exclude earthquake, but it's also going to have limits on personal property, things like that. One thing to talk about in personal property is jewelry. So, everybody thinks they buy houses and they've got a home and they've got $200,000 of personal property insurance, and they do. But if on an individual basis, if somebody breaks in and takes your Rolex or your wife's wedding ring, there's going to be limits. And a lot of times those limits are only about $2,500. So again, back to the conversation of talking with an agent to make sure those things are covered correctly. There's easy ways to do it. It's not expensive. You have to include them. You can write separate policies for them. But if you're not having that conversation, then you're really going to be exposed with somebody.
Coming down to that, when you say you have to look into it, do they have to get all the jewelry?
Everybody's probably different. We require to write new business, we require an appraisal or a sale purchase within the last 5 years. And then after that, it's fine. And some people will want to reappraise that stuff to make sure that it's correct. But if we're writing new business, I can't speak for what other companies do. We need some sort of proof that it's worth the value that it's worth. So, but as long as it's been appraised or purchased within the last 5 years, that would be fine.
You mentioned beach houses. Brings back to coverage. Does it matter if it's a long-term rental lease or short-term?
Yeah, it does. So typically, if it's going to be long-term, then it's going to be truly considered an investment property. If somebody were to purchase a home at the beach that they were to use as a second home, but they were going to short-term, everybody's a little bit. Actually, need is hey, 4 weeks a year, I'm going to rent it to somebody, or hey, I'm putting it on VRBO and I'm going to rent it as many times as I can. So it's really another conversation to have. There's exceptions in a lot of different ways, but it's important because if there's a claim and they find out that it's a tenant that's been there for 2.5 years, the insurance company has the ability, if it's not written correctly, to say this is not who we were insuring, and they could deny that claim. So it's something that it all can be prevented by just having a conversation.
Well, this up. It's super lightning. I noticed on your signature in your email, it says Blue Blue Shield. Tell me about that.
So North Carolina, Florida, we're in all 100 counties in the state. Blue Cross Blue Shield is in all 100 counties. Changing the health insurance, things just changed over the past few years with the marketplace and so forth. But we have at least one agent in every office. We have 6 offices in Wake County, but at least one agent in every office, Blue Cross Blue Shield, and also for our clients. So it just kind of shows you between that and our life insurance company, we try to be a full advisor for our clients the best we can and staying for them and protect them. I mean, we're a kitchen table company and we want to be able to provide those things for our clients.
So home, life, health, what else?
So so home, auto, life, health, and we do commercial insurance as well. I mean, we stay in our lane when it comes to insurance, but we do a lot of it. And
I don't think that's that.
And the quick backstory of who we are as an insurance company is Foreign Bureau Federation is our president of the North Carolina Foreign Bureau Federation. He's our boss, really. He oversees those things. Now we have the insurance arm of that, but it was written years ago to provide insurance to farmers. All the farmers were on the rural side of things, and they couldn't get fire out there and they couldn't get insurance out there. And that's kind of how it all started. And, it's pretty interesting. I live in but the county offices in the rural parts of North Carolina are where people get their health insurance. They're where people go for banking solutions, sometimes for loans. And they're where the farmers and everybody go. We still have clients walking and pay premiums. So it's, we do have some advanced technology that we all want in apps and things, but you can walk right in and pay for it. So.
Well, Chad, you sound like you're the go-to guy for insurance. And I think you'd make a great partner for for real estate agents to get you in early. The earlier the better, it sounds like. To help them negotiate on deals. And is it premature, I think, calling you before they actually put it, or they're just considering property? No one had that luxury of time before, but now it's market has shifted a little bit. Buyers have a little bit more time to consider home. If you want to get that, does it help you and them to get that information before they actually make an offer?
Yeah, the earlier the better. It's very simple. Your agents, the agents can reach out to us with a name and an address, and we can provide them information. One of the things that's beneficial for the agent at that time when they go to their client for it is we're going to run a claims report at that point, and we can provide that information right up front before they even go in and start having conversations with them.
So that's fantastic. So that's a great time. And then and that's going to just help the transaction go smoother. Smooth transaction makes a happier client. And then sellers, there are people that already bought that are already in their home. The agents have another good touch point to just reach out, talk to them about what's on their policy. I'm talking to Chad about looking at what's covered, making sure that their costs are covered for any damage that.
Partnership that we talked about at the very beginning. So we talk to our clients at least 6 times a year, changing cars, doing this, doing that, and then our annual reviews. And I know one thing that's important in all of our industries is staying in front of our clients. And so the relationships there and relationships that we build with our clients, try to keep that front and center for your agents.
Chad, how can somebody get in touch with you? What's the best way?
My cell phone. That's the best way. 919 410-3337. My business card has my cell phone on. My office is 10 on Western Boulevard. There's a reason we put our cell phones on the business card. Hopefully people don't need this in the worst case scenarios, but sometimes they do. But also agents, a lot of times they're out in the field on a Sunday afternoon. I think one of the things that separates us as agents is we'll answer the phone as well because we know that's what they're trying to do what's right.
Make a good partner.
So I appreciate the time. And if anybody has any questions.
Thanks for coming on, Chad. See you next time.